Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet for Monday, October 16th. And before I do that, let's go over the rules that ICT came out with on the original Silver Bullet video that he came out, okay? I know that recently he came out with one that was the market maker model Silver Bullet. That's the OG Silver Bullet. That's the original Silver Bullet, second stage of accumulation or distribution. That is the original, so OG Silver Bullet. The Silver Bullets I'm talking about are time-based, and these are the rules that he came out with when he did his first video. Okay, he says the framework for most of the ICT Silver Bullet setups are as follows. The main emphasis is determining the next most likely draw on liquidity. Okay, so it's either previous daily high or lows, previous session high or lows, previous week higher lows, return to a current or old new week opening gap, or expansion away from a current old new week opening gap. Okay, classic ICT optimal trade entry is an entry technique, and confluence of the 2022 ICT YouTube mentorship model, another entry model, right? So all these are draws on liquidity, and then there's some entry models, right? That's the rules that he came out with. So if we just keep that in mind, we're going to open up the Kraken Silver Bullet Indicator Pro, and you can find out how to get your version or yours below in the description of the video. Okay, if you're trading ICT Silver Bullet hours, you really need to have this indicator because it's going to help you with your draw on liquidity. And if you want to look at it, we'll just keep an eye on this. What he has, previous daily highs, here's previous daily highs and lows. Previous session high or lows, here's all your sessions for highs and lows. You can adjust the times, you turn them on and off, and we even give you 2 extra sessions down here. Previous week high and low, here's your previous weekly high and low. Return to and expansion away from new week opening gaps, here's new week opening gaps. Okay, so everything you have for trading his ICT Silver Bullet setups that he originally came out with and said, here's what you need to trade these time-based hours of the Silver Bullet hours, it's all in this indicator right here. It also has new day opening gaps, Killzone's backgrounds, Silver Bullet backgrounds like you see in my videos, a whole bunch of different lines that we're adding to here for normal analysis. You can have show fair value gaps, you have show balanced price ranges, show order blocks and breaker blocks. You have 10 macros that you can turn on, macro backgrounds to show you, highlight when the macros are occurring. And then the power of 3 candles, open, high, low, close, for the 2 hourly candles. Okay, the last full hour and the current hour, and they paint live. So this is an indicator. All updates are included, and it's a one-time price, and it is extremely affordable. Link is in the description of the video. Okay, so back to this video right here. We're at 10 o'clock hour. So let's start looking. Let's see where the Asian range, if it's up here or anything. If it's up here, where we got. Okay, so let's just look at this. Very small right here, but let's look at this right here. The Asian range, the high and low has been taken. Don't need it. Let's turn on London. I literally do this before every session. All right, so here's the London high and low. London high has just been taken. The London low has not been taken. Okay, so I'll leave that on there. New York Killzone. It's going to go to the last session. Okay. New York Killzone's right here. New York Killzone's right here. Obviously, that's still in play. Okay. So that's till 10. So there's go. You have AM session. This will be the last AM session. It's down. It's all side. Buy side is way up here. Previous daily high. Okay. So we'll turn that off because we have previous daily high up here and we have it down here. So we'll just turn the high off so we can see the previous daily high. All right, so we just turn that off. Let's turn the New York lunch. Okay, we just took New York lunch high. Okay, buy side's down here, hasn't been traded through yet, so we're good. PM session liquidity. So we just took buy side. Well, we took buy side way over here, so don't need it. Take it off. Okay. All right, so let's zoom in here. Let's see what we've got going on. So we start the 10 o'clock hour. We're close to taking out New York Killzone high. We've already taken New York lunch and the London high, right? We've just taken them out. But I'm not seeing a market structure shift yet, right? I want to see this low broken right here, right now, for us to start looking at going short, okay? So just because we've taken liquidity doesn't mean we're automatically aiming for the opposite side. We still need market structure to shift. We need to see displacement. We want to see a fair value gap, and we want to see, a reversal pattern. We're not taking it for, pattern's sake. We have a fair value gap here and a new week opening gap. So let me turn on this right here, fair value gap. That's overlapped with the new week opening gap. Now it's being respected. So I'm actually thinking the closest liquidity target is actually New York Killzone. Then my next target would be this, expansion away from, which we're expanding away from, and return to current old new week opening gap. So our first target would be this. But then I also see this previous daily high. So if we're going long, my first target would be, obviously I want to take out the Killzone high. Okay. Second target would be new week opening gap. Third target would be previous daily high. All right, so let's see how, if we come back in here and keep respecting this, then we're going to take a trade here. Go long. Because your next liquidity is the Killzone down here. It's not saying it couldn't go down that far, but I think this is closer. So I think it's going to go higher. And we already took these two liquidities right here and we didn't reverse. So it tells me it still wants to go higher. All right, I'm going to buy two there. Put my long position on here where it would have entered me. And I'm taking it off the new week opening gap. That's these two purple dotted or dashed lines. And the fair value gap. So it's overlapping and it's just being respected. And we're not breaking through here. Now if it takes me out, obviously it's going to take me out. And it's just is what it is. All right, I got 5 handle risk. This is 26 handles. If I go up to the high here, first target was this, which is again 8.5. So I'd need 2 to 1 would be right here. 10 handles right there. Second target would be right here, which is 16 handles. And then we'll go to our top target here of 26 for the previous day high. Okay. Okay, so I'm going to start trailing my stop, how I would trail my stop on this. So I'm going to show you. Someone asked me before how I did that. So I wanted to show you here. So right now my stop's right here, right? So then I see a fair value gap right here. I see two volume imbalances right here, so I'm just going to highlight them both as a volume imbalance right here. Okay, there's 2 of them right there. They overlap. You see another fair value gap right here. That's fair value gap. You have another volume imbalance right here. And you also have a fair value gap right here. Okay. So my stop would probably be right here at this point. Why there? Well, the 3 PDRA rule. ICT has said that he doesn't want to see 3 PDRAs get violated, then you're on the wrong side of the market. So there's my 3 PDRAs. Fair value gap, a volume imbalance, a fair value gap. Okay. Expecting a reaction like this when you get close to the new week opening gap because it's just normal. Okay, that now leaves a new fair value gap. Select it. Okay, so there's one. There's a volume imbalance here. There's a volume imbalance here. Let's just go up to this one right here. It's in real time, it's hard to mark out all these. You just got to see them, you got to spot them, and they're really kind of a pain in the butt to draw out. But that's where I'm trailing my stop, you know, and if it comes down here, everything's going to be taken out. So I will say that when I get closer to the top, like this, like right here, I don't care. I'm moving it up, way up. Probably underneath this fair value gap. I don't want to see that get violated. Because there's a volume imbalance here and there's volume imbalance here. So that'd be the third one. So I'd be very aggressive with my stop, especially on Apex, but I'm keeping as much as I can. So, okay. All right, flatten. Done. See how the rest of the hour played out. Okay. All right, let's turn off the long position and let's go over this. All right, we came to the 10 o'clock hour and we opened the Kraken Silver Bullet Indicator Pro and we marked out our liquidity targets, right? We went through all the sessions and found out that we just took the New York lunch buy side and London high. So we were looking over here, they took them out down here and it didn't, it's continuously making higher highs, right? It's not taking out the lows. So there's no market structure shift. So we saw a fair value gap that was sitting right on top of new week opening gap, and they just kind of hovered here. It's just kind of been respected, right? So thought process was, where's the nearest liquidity? Well, the nearest liquidity at the open was the New York Killzone high, right? So at that point, that was the closest, easiest target instead of coming all the way down for the New York Killzone low. So that's why we decided, hey, we're going to go long. Where are we going to get long at? Well, new week opening gap, which is expansion away from, and so there you go with the fair value gaps. We took our trade, and then our target low-hanging fruit was above the New York kill zone, and then the second target was the new week opening gap, and then the third target was the previous day high, right? And we trailed our stop based on the 3 PDA rule. We don't want to see them get violated. Instead of taking partials, we just trailed our stop. And one reason I really like doing that is because I like to let my runners run, at least try to let my runners run. Because if you just do your targets, you take a partial and break even, or you just let it take you out here, you're missing more moves. And what about the ones that, like, say you stopped right here, your target was right here, you missed all of that. And if you just would have followed the 3 PDA rule, you were safe the entire way up, unless it went down and took you out. But you would, on the runners that do run, you're going to catch more of the move. So that's why I started doing the trailing stop better. It doesn't work out all the time. It's a learning process, but that is your silver bullet for the AM session on Monday, October 16th.